First, what's similar about how the sourcing of worthy people, the due diligence, and the processes are related to investing, directly in startups when you're investing in VCs and funds?
There are a lot of similarities. That's a good observation. We think about it all the time, both in terms of how we operate and communicate the message of Plexo Capital, but also what we look for in other early stage firms and general partnerships that we want to invest into. So, if I were to think about my job as an investor into companies, then there are certain things that we would look for. We'd look for the market size, we'd look for the problem being solved, we'd take a look at the solution and how it fits within the overall competitive landscape, and most importantly, especially at the early stage, we'd look at the team as well. And then in combination of all those things, kind of one of the things that should surface is what is it that makes this company really unique? What's their competitive advantage? And I think that applies to the world of investing as a limited partner. When we look at GPs that we're interested in backing, GPs are the general partners that lead venture firms. If we're looking at a new fund that we'd like to consider, we think about the opportunity that it's going after. Is it thesis driven, and is it taking a certain approach around, let's say, enterprise software and the opportunities within that market? Or is it taking a geographic approach? Kind of what's the positioning of the firm in terms of how it's going to deploy the capital. And then we look at the GPs. What's their track record? What's their experience? What do the entrepreneurs have to say about working with them? What do other GPs have to say about working with them? What do their LPs have to say? And we take all of that and then we think about, okay, what's the unique advantage that these GPs will have that will allow them to win the best deals? So there are a lot of similarities between investing as a general partner into a entrepreneur as there are as investing as a limited partner into general partnerships.
What is wildly different versus investing directly into a company versus investing into a fund?
Yeah, here's the thing that I think is wildly different. When investing into a company, the risk is isolated into to kind of one point of fault, right? There is the company itself, the entrepreneur, the team, the market they're going after, but basically the risk is isolated into that one investment. Investing as a limited partner, it's a little bit different because what I'm doing is, as a limited partner, I'm basically investing into the bank account of a general partner, and they've got a blank checkbook. And so I really don't know the investments that they're going to go and make, right? They'll tell me a story. I can look at their track record. I can look at past investments they've made. But at the end of the day, the risk is a little broader. So, it definitely takes a little bit longer in the diligence process, investing as a limited partner as opposed to investing as a general partner.
So you're specifically focused on helping minorities get into this space. And as a byproduct of that, we're not all coming from Silicon Valley or Stanford, and in many cases, you have to do more to cultivate that crop of VCs. And if I understand correctly, so is there a strong pipeline of Black and Black female VCs to be able to come to Low and say, hey, we got the right stuff?
Absolutely. We track about 13 to 1400 firms globally, and we've had a touch point with close to 500 of those folks. And there's a strong mix of Black general partners within that set. They have the capabilities, the qualifications. It's really often just a matter of getting the opportunity, kind of getting that first entity or person to believe in them, to back them, to go out and invest. What we've learned is that it's important also to have a little bit of a different approach in terms of evaluating a general partner, especially when it comes to track record. So I think we're fairly flexible. Obviously, if someone is on a fund two or fund three, we can look at fund one or fund two performance. If someone is coming out of a shop that allows attribution, they're leaving a larger firm to go start their own venture firm, hang their own shingle, we can look at their track record from that firm if the prior firm allows attribution, or we can help the GP piece together what their track record was at that firm and what their role was in the deals. Did they help to source the deal, due diligence? Did they lead the investment? Did they take the board seat? We'll even look at prolific angel track records or folks that spin up SPVs. I think all of those components allow us to be a little more flexible when it comes to track record. Again, going back to your opening comment and observation, at the end of the day, this is a people business. And so we spend a lot of time getting to know the people and understanding not only their acuity of being able to identify high performing venture scale startups, but then also how those GPs are ultimately going to work with entrepreneurs and what's the value that they provide after the check and what's their reputation going to be built upon.
Yeah, I love that you talked about value. I was talking to Ida Ekpowden from Gingerbread Capital about this, and we were talking about how it's hard enough for Black women to see inroads into entrepreneurial and or career success, getting better in some ways, but it's still difficult. And it's another thing to tell them that they can be the investors, into a lot of the companies that they come into contact with. When you talk about value, I love talking to VCs about, like, what is the unique value that, your thing, like, what's your unique opportunity? What are you uniquely situated to do? What unique value do women bring, Black women particularly, bring to investing?
What we look for in general partnerships and general partners is some unique access to be able to source amazing deal flow. And the insight that we had at GV, formerly Google Ventures, where Plexo Capital was really born, was that women and people of color, in fact, we started with Black GPs. We did 5 commitments at GV into uh, seed stage venture funds led by Black GPs. And the insight was kind of this indirect path into venture allows for access to some unique networks to get differentiated deal flow. But there's another piece as well. I think it's the lens that a Black GP or a woman or a person of color can use to evaluate market opportunities, especially at the early stage before there's a lot of data. So it takes some familiarity with markets. And then also having that lens be able to evaluate an entrepreneur differently, because not every entrepreneur that's successful has to look like a Mark Zuckerberg. And so I think what Black women in particular bring, again, kind of going back to these networks, we always have to, whether it's Black women or Black men, we have to work twice as hard to get half as far, and it's going to take us twice as long. And I would say that if we think realistically about the challenges that Black people have, but in particular Black women, I mean, they're probably in many cases working 3 times as hard. And so I think without question, there's the ability to kind of have that drive. And I think we've seen that anecdotally. But then I think also going back to that lens, I think the ability to kind of have the recognition around a certain set of problems that might be unique to their experiences and being able to see that there are venture scale opportunities in those at the early stages, I think is really an advantage for Black women. Now, some of the challenges are it's often a little more difficult for them to be able to raise the capital to go out and start to make those investments. But I would say, or often some of the target markets they might look at, people might not believe there are venture scale opportunities within those. And I think what we are starting to see at least is a group of millennial and Gen Z Black females that are out doing some great things. Maya at Ingressive Capital, or Monique at Cake Ventures. I mean, Mariah, and the work that she's doing. There's a lot of success points that we will have to monitor and observe looking forward. And they're out there doing some great things. So, tip of the hat and applaud them. And we want to back as many of them as possible.
There's different levels of involvement that a VC, may have when they're investing seed capital directly into a startup. Some are, just bored. They just sit on the board and they come to the meeting. They show up after they wrote the check. Some are very involved, in the operations of the organization. When you're investing in the funds, what would be the norm, I guess I should say, on your involvement into that fund that you invested in?
For us at Plexo Capital, when we think about making an LP commitment, we want to be a value add limited partner. So if I think about the models that influence us the most or provide inspiration for us, I think back to my days at GV, Google Ventures, and the operating partner model that GV brought to the table. Andreessen Horowitz does the same thing. providing more than just capital and a partner to lead diligence, make an investment, take a board seat, but also bringing these other skills to the table, whether that be business development, so helping companies helping some of the portfolio companies identify customers, or whether it's talent, so having staff on hand to be able to help companies recruit talent. So I think all of those things are what has guided our model. So when we think about how we add value at Plexo Capital, it goes beyond just kind of providing an LP commitment. We also look to do things such as have our portfolio manager, Vishal, help a general partner with their portfolio construction models and how they should think about both the modeling of what they're going to do with the capital, but also how to communicate that. We also have a person, Kate, who has done a great job for us in terms of helping us punch way above our weight class in social media and marketing. So Kate will sit down with our GPs and help them think about how to leverage social media to build their brand, or even thinking about marketing and other PR efforts. And then finally, and probably most importantly, Kuji, who leads investor relations for Plexo Capital, really works hard with the GPs to work with them on a go-to-market strategy for fundraising. Because at the end of the day, let's be real, if there's no fundraise, then none of this other stuff matters, right? So this fundraising piece is often the most important component and can be the most challenging for a fund one or a fund two general partner. So Kuji will work with them to put together a robust go-to-market strategy that allows them the GP to understand how to communicate their value proposition. Kuji will help put together a bespoke list of prospective LPs and then give some guidance on how to work with those prospective LPs in terms of getting the meeting scheduled. What should the cadence look like? How should the follow-ups be handled? And then finally, we have one of our advisors, Georgianne Perkins, who spent 23 years selecting GPs for private equity and venture capital for the Stanford University Endowment. And Georgianne works both with our Plexo Capital GP network as well as with GPs from our new program, GPX. Georgianne will do office hours with them to give them what it's like to actually present to an institutional investor. And she'll hear their pitch and then provide them with coaching. So I like to think that Plexo Capital our aspiration is to be the most value add LP possible.
I think that you talked about like the social media marketing and building your brand. That is important to getting deal flow. And for the sake of those frustrated founders out there who, Michael Seidel was here at AfroTech. I want to say this was maybe 2018, and he said something that was striking for him to, if somebody in his seat to say. He said, "There's this myth that you come to Silicon Valley and people just want to write you a check to help you make your dream happen, right?" And what he was saying was that it is not as easy as it sounds to come to Silicon Valley with an idea and people just start throwing money at you. And so,
Yes, for anyone.
yeah, and I want to get your take on this because there are a lot of people who see the marketing that comes from venture capitalists, like, hey, we want to hear your thing. Hey, we want to, invest in the best Black startups. We all believe we have the best Black startup, and then we run into these brick walls. And so, can you add some perspective to the marketing of venture capital and specifically Silicon Valley, and for the frustrated entrepreneur who's running into no after no?
Well, there's a lot to unpack there. I think let's just start with Michael's observation, and I've heard him say this before. Look, it's hard to raise money as an entrepreneur or as a GP, no matter what gender or ethnicity someone is, right? It's hard, especially, seed stage startup, first time entrepreneur, fund one for a GP. All of those things are hard. You got 99 problems. And if you're Black, you got 100. If you're a Black female, you have 101. And that 100th and 101, those are really big relative to the other 99. But look, it's just to say that it's just hard in general. I think what ends up happening for a lot of the entrepreneurs, what we've heard within the last 18 months in the aftermath of the unfortunate killings of Breonna Taylor, George Floyd, the countless others before and after, is a willingness and an openness to want to, for venture capitalists to want to be at least perceived as embracing new deal flow. And I think that's a good thing. There's a lot of sincerity by some. I've talked to some, and I believe they are sincere. And we've actually seen some companies founded by Black entrepreneurs receive funding. But look, let's be honest that a lot of it is also just talk as well. And so I think what we need to do is we need to keep track of who are saying these things, and hold them accountable. We also need to move beyond this notion of, hey, I'm happy to have office hours to mentor people. I mean, there's been more than enough mentoring. Like we have oversupply on mentoring, we're undersupply on the ability to actually have folks writing checks. That's really where the demand is. There's not really a whole lot of demand at this point for mentorship. There's demand for write a check for my startup. But we have to again recognize that this is a journey. It's a hard process for entrepreneurs, and let's be honest. A lot of companies are going to fail. But I think what's most important is people want to feel like they were given a shot that is a level playing field, and they're given the same opportunity as a Mark Zuckerberg wannabe that also walks through the door. I think as long as we feel like it was a fair process, we actually had an opportunity. I think that's the most important thing, because then it's on us to be able to perform.
I love that. Speaking of, the Ahmaud Taylors, I'm sorry, the Ahmaud Arbery's, the Breonna Taylors, George Floyd's. There was an article you wrote about a year ago now. Called "I'm a VC, but still a black man in America," and there was a line in it that I found particularly interesting. And you talked about, and I'm going to paraphrase a little bit because it makes more sense for me this way. It says, "As a politician, it is now time to create legislation that will undo the damage of the past centuries to the black community, or resign, or be voted out. And so those politicians that are capable can make the changes necessary." How has legislation kept particularly would-be black founders and VCs from having opportunities to build wealth, generating enterprises?
Wow, that's a great question, because I think when we think historically about, we can go all the way back and just look at legislation that prevented Black, you know, um, families from being able to own real estate. The federal government actually worked with state and local governments to put processes in place. Redlining is the one that comes to mind, but it was more than just redlining. It was also the affordable loans that were done after the New Deal to be able to ensure that people could have a smaller down payment and a longer timeline, 20 years, to be able to make smaller payments to allow people to actually afford to buy homes. The GI Bill, when folks returned from World War II, the ability for really with almost no down payment to allow GIs to be able to purchase homes. And when we look at how many black folks were actually able to participate in those programs, the numbers were very small. The government actually stepped in at the federal level for the programs put in place after the New Deal to actually, that's how redlining started. They basically said, if there were any black folks living in those districts, then the area wasn't eligible for a loan. And what did that do? Well, it prompted legislation at the local level to be able to say, through homeowners associations and through city, um, you can't sell to a black person, right? And so those have had damaging effects that that are going to haunt us for at least another, I think, another 100 years at a minimum. So that's the damage that legislation should have. What's really interesting right now, and I know that we're in a position where we're looking at both an infrastructure package of at least 1.5 trillion, up to some of the other proposals to be able to provide education, childcare, and universal health care that are up to $3.5 trillion. You know, One of the things that's being looked at is the carry as well. That is the profits that venture firms make, and how that's treated on taxes. And I think it's kind of a little bit and listen, I am one where I really believe that we should have Everyone should have health care. We need to address the situation with childcare. I believe in all these things, but it's just unfortunate that now it seems like, right when the point where we're just starting to see some inroads made by Black folks, now the tax folks come, and so those are some of the things that are a little frustrating. I often think, what are ways that we can kind of help? I mean, sure, we can talk about reparations, but what are some of the other ways that we can use legislation to be able to help with entrepreneurship? I would say both, the private sector, obviously, there are things that can be done and have been done, but, what can we do on the federal level as well to be able to help, Black folks open more businesses, get the funding, and start to generate wealth for ourselves?
When you think about limited partners, I'm sorry, and like large institutional ones that could be pension funds, could be universities and the like, they're investing the capital of quite often like hourly workers, middle class workers, and janitors, teachers, etc.
Yeah,
Many
black and
of
brown folks.
Black and brown folks, right? And at the same time, those dollars that often get invested don't go into Black and brown companies. And so that money leaves the community in so many ways. Because as you know, I mean, you invest in 100 startups hoping one makes it, right? And so how important are mandates to where institutions say, look, we're going to invest in Plexo and Plexo is going to invest in a number of companies. We want to make sure that some of those are, Black and brown folks. How important are those mandates and what effect do you hope that they have so that, some of those resources can, benefit the communities of the people who generated those dollars?
That's again a lot to unpack and dig into, but this is an important topic. I think when we look at some of the pension funds in particular, think CalPERS, CalSTRS. I mean, these are multi-billion-dollar um, assets under management, and when one looks at the population that they serve, as you pointed out, the folks look a lot like us. They're Black and brown folks. And but when we look at the asset managers that are managing those funds, they typically don't look like us. And we can also take this and apply it to foundations. We can apply it to endowments, right? College endowments. And at the end of the day, I think it's important for the markets themselves to recognize and understand the opportunity and realize there's going to be money left on the table by not being inclusive with both who's doing the investing and who's receiving those dollars from the investors. However, what I also know is that that's not going to work on its own, right? We've seen it and it moves too slow. So I believe that we do need to have some type of mandate. Now, that can manifest itself in many different ways. That can come from, a top down from the federal approach, or like we've seen most recently, California mandating that companies that are listed on one of the stock exchanges that are based in California need to have diversity on their boards. They need to have Black, brown, female. So that's a good mandate, right? That will affect change. So we can see the benefit of having legislation from the top down. I would also say what's interesting, looking at the population of some of these entities that are managing money on behalf of someone else. We're talking CalPERS, CalSTRS, a lot of Black and brown workers. Well, you know what? Change could be affected by organizing those folks to put pressure on the investment committee and board to say, hey, we want to see our dollars, because in essence, they are the dollars of those people, going to managers that look like us, that are investing into companies led by folks that look like us. So I think there's a couple of ways that it can happen. But as much as I like just letting the market play out, this is the case where it's just not going to happen, or it's just not going to happen fast enough if we just leave it our hands off and allow the markets to just have it correct course.
There's so much more I want to talk to you about, but to be sensitive to your time, I'll do one more. There's much better of a flurry of activity happening now with Black investors at the angel level, the seed level. But when it comes to A rounds, even less B rounds and C, there's a lot less people who look like you and I, right? And how do we get more institutional investors, more Black VCs at later stages of the game?
When one thinks about how to put together a strategy for a venture fund, the thing that immediately becomes apparent is that the strategy is often dictated by the fund size, and to put it simpler, your fund size is your strategy. So what we've observed is that there are a number of talented investors at multi-stage firms or later stage firms. And what ends up happening is if those folks decide to leave that multi-stage or late stage firm and hang their own shingle, the constraint is often how much capital can be raised with that initial fund, to the point where if one GP, even with multi-stage experience, can only raise, 30 to 50 million dollars, well, then all of a sudden that's an early stage firm, even though the GP may have late stage experience. So that's one of the challenges that we face, is that often the folks that have the talent and the drive to go and take that leap of faith on their own and hang their shingle, they're limited in terms of how much capital they can raise. Now, over time, fund one, fund two, prove some success, they can raise more over time, then they can move to invest at some of those later stages. But I would say that's a very astute observation in terms of one of the constraints that we have downstream for Black and brown entrepreneurs, is that there's not enough capital at those later stages. Now, that said, I suspect that mentally it's more of a leap for investors that are not Black and brown to actually invest at the earlier stages of entrepreneurs led by firms led by Black and brown entrepreneurs, because there's not a lot of data, right? At least at the later stage, you tend to cross a point where there's enough data from what the company's performance is, that it's, that kind of barrier is lowered a bit. Not to say it is completely eliminated in terms of entrepreneurs that are Black and brown being able to go to late stage capital that is not led by Black and brown GPs. But nonetheless, at least there's some data, there's some performance that can be shown that allows the entrepreneur, Black or brown, to be able to better compete in the market. But that said, I do believe that we need to see more large scale firms, multi-stage firms, later stage growth firms led by Black and brown GPs to be able to better address that capital gap.
Hello, Toney. Thank you so much for spending time with me, man.
Appreciate it. Thanks for having me on.
Absolutely. We'll talk soon.